Good afternoon. This is Tony Cherniawski with the Practical Investor LLC. Today is November the 16th, 2008. The name of today's program is Riding the Rogue Rally. I wonder how many of you have already been bucked off this Bronco. Don't be surprised. I'm sure there's a number of hands being raised out in the audience. So what I'd like to do is just go into further development of what's transpired so far and what we can expect to see in the next few days. We'll start off with the industrials, and you can see here that we had this breakout to the downside on Thursday, followed by a rally up, a very strong rally, right up to resistance practically. And then on Friday, we saw a non-trending sort of consolidation pattern here that has left a lot of people in limbo in terms of where we're going with this market. Where regular triangles tend to get smaller and smaller with each move, what we have here is the opposite. We see a wider and wider trading range, giving new meaning to the word whipsaw. Improper diagnosis of this can cause a lot of severe financial pain because there's no way to anticipate the next move in this pattern in advance. Most experienced traders, as a matter of fact, are out of the market because of a lack of a clear trading pattern within which they can work. These are all no action indicators, by the way. So let's move on, and we'll take a look at the NASDAQ, and we can see now that the NASDAQ has also joined the expanding triangle formation. Up till last week, the NASDAQ was in a regular correction, moving pretty well sideways, but the expansion was not as evident as it was in the other programs until Wednesday when we saw the new low. The Standard & Poor's also has the same kind of trending pattern of wider and wider moves within the trading range. One of the things that I've noted with expanding triangles is the lack of Fibonacci relationships. So one of the things, when I'm saying that these patterns are more and more complex, that's absolutely true. We've got the people with Elliott wave that really don't have a clear understanding of where they're at yet. We've got people who use Fibonacci relationships that are clearly clueless right now, because one of the things that we have is a lack of Fibonacci relationships within the expanding triangle, and we have a pattern that's becoming more and more complex. It wouldn't be surprising to me that if Monday morning, instead of a rally out of the open, we may see even a further decline here, giving the impression of a further expansion to the downside as well. So let's cover some rules of the road. First of all, these patterns need to get above their overhead resistance before this pattern can continue on to the upside. That's very clear right here, and we may yet see a situation where there's a false move at the open to try to get people to become more bearish before the market rallies up again. What we'll probably see is a much stronger rally this time, and in fact, once we get above these resistance levels, which then become support, we can see clear sailing to the upside. One of the things that I want to say is that there's no guarantee that these upside targets might be met. I don't have any targets here other than the upside trend lines, and even those have only about a 50% chance of being met. So we're in a unique situation here in a very complex move. What I want to say is that if these upside targets do get met, they'll get met dramatically. This is going to bring a lot of people into the market at the top, just in time for the trap door to spring open. I just hope that enough people view this to understand that this is not a bullish move at all, but it'll have all the appearances of something that could be very, very bullish and yet fool the most people. So just to be aware of this, let's cover some trading rules here. Number one, don't get married to your position. This is not something to buy and hold at all. This pattern it needs to be very quickly dealt with when it's not doing the right thing for you. When in doubt, stay out. That's another rule of the road to follow. Always be multidisciplined. Try to take several different views of the market, not just a single view, including mine. by the way. Don't over leverage. This is also very critical in this market right here. And finally, wait for your signal. If you feel that something is going to happen, some people can be a little bit jumpy about this and move ahead of themselves. And unfortunately, this is the very type of market that can whipsaw the most people at the most odd periods of time. So just be aware of all this as you're moving along here. This could be a very exciting rally. At the same time, this is not the rally. The bottom is not in. We have some very clear indicators to say that once this rally is done in a very short order, it will flip around and move in the opposite direction in even a more impulsive fashion than what you're going to see next. So without any further ado, I'd like to just say I hope you all do the right thing. You can reach me at tonyc@thepracticalinvestor.com, and I hope that this is a bit of education for you to understand what these markets are all about. And if you have any feedback, I'm glad to listen to both sides of the issue, so feel free to be in touch with your comments and criticisms. Thanks again, and have a great week.